Today, we're going to spend the entire video talking about inflation and interest rates, and maybe towards the end we'll get to growth stocks, but I really got to make a point here because nobody else is making this point. Everyone else seems to be saying something else and some variety of something else, and I think a different way, and nobody else has been saying what I believe is actually the truth. So today, we had Biden and former Obama economic advisor come on CNBC and talk about the $6 trillion spending plan. The new budget that's going to run us at a deficit for the next 10 years, $1.3 trillion deficit each year. About $3 trillion this year, I believe. And then it's going to become profitable. So I don't even care about what's going to happen 10 years from now. That's ridiculous. There could be another crisis in 10 years and all of a sudden we're going in the same thing. I don't even care about the fact that we're running a deficit. We've been running a deficit. The deficit is big. I agree with him on the notion that some inflation is technically going to make it easier to pay the deficit because the dollar gets weaker and all of a sudden you can pay the deficit. Sure, we can print all the money we need to pay the deficit. Totally possible. What I did not like, the main thing I did not like about this one particular advisor, Mr. Bernstein, he comes on and he lies on behalf of the current White House and Biden administration and says and puts in this report, and everybody else who was involved in this report that released today, that inflation is expected to be 2.1% each year. 2.1%. That was the target rate before we did any sort of massive stimulus. Inflation is a delayed indicator. That means we do things and months or years down the line, we begin to see it. Just this morning and last month and the month before, we have begun seeing inflation numbers dramatically over that 2.1%, surpassing expectations beyond our wildest beliefs. For some people, our wildest beliefs, much hotter than expected. Yet, the White House, whoever worked on this plan, Mr. Bernstein, they refused to update those numbers and left them at the most basic numbers. Now, the reason why I have such a, not only did they lie, the actual economic reason why I have a problem with this is because this is like the fundamental layer that can determine whether or not we can inflate the economy, print a bunch of money, pay off the debt, go into all this debt. And it seems like they did not convince me. They didn't do any convincing that we can. They lied about the one factor that matters, which is inflation. They lied. The White House and Bernstein lied about inflation, reported obviously false numbers in their proposal to raise the budget to an incredible amount and keep it there for 10 years. That is ridiculous. They need to go back and redo that with the data. When the facts change, you have to change. And Mr. Bernstein, Mr. Biden, and Mr. Biden administration, I'm sorry, but the facts have changed. You have lied to the American people about the American dollar and have yet to update your budget proposal. So go back home and do that right now. That's urgent. That's got to happen. So what do I think is going to happen? Regardless of what the proposal looks like. Obviously it's going to go through the Senate and there's going to be changes made. It's probably not going to pass in its current form. That's just how politics work. We're seeing that with the infrastructure package. We're seeing that with the January 6th insurrection investigation. Nobody gets 100% of what they want. And for better or worse, that's the way it is. So something's going to happen. But regardless, I'm not convinced that inflation is transitory, temporary. I think that possibility is impossible. The reason for that is because wages are rising and they don't go back down. Wages do not go back down. Once wages have risen, they stay risen. And it's possible the minimum wage is going to be raised to 15. That's another thing Biden talked about. So if we raise wages, even if they're low wages, everyone's saying, oh, we want people to have higher wages. yeah, we want, your family member to get a better job so they can get a better house. But if everyone's wages go up, if, the lowest McDonald's workers' wages go up, all of a sudden your Big Mac costs a couple dollars more. That extends across the entire economy, and they're not going to decrease the price of the Big Mac. And guess what? That's inflation. It extends everywhere. Housing prices, it's already hit pretty aggressively. Car prices, it's already hit pretty aggressively. We haven't felt it in things like groceries yet, but it is coming. And there will be inflation. No matter how much Biden, Bernstein, all these people want to lie to you, because clearly they do. They clearly want to lie to you because it's advantageous to them. 100%. That's the case. That's what they did. They lied. And go watch Bernstein on CNBC today. Go watch Bernstein on CNBC today, May 28th, 2021, questioned by Wilfred Frost and Sarah Eisen. Go watch that. They lied to you, and they want to. That they win. Anyways, inflation is pretty much guaranteed because it's happening, and you have people lying to you about it from the government. That means it's happening. What does inflation mean to the stock market? Well, here's the thing that I was talking about at the beginning of the video. A lot of people are saying that inflation is bad for the stock market, interest rates rising, bad for the stock market, and that's true. They're a competitive long-term asset. If interest rates rise, they're suddenly a more interesting asset. But this is something I was talking about before interest rates began to rise. And I'm now returning to this notion because I think this is like a crucial video right here. This is it. This is, interest rates and inflation, my stance. I'm not changing until the facts change. If inflation occurs, I think it's good for stocks. If companies or a company can continue to grow at a decent pace, I'm taking a language and solidifying that I'm not the only one who thinks this from Social Capital and Chamath Palihapitiya. If a company can continue to grow and grow faster than the rate of inflation and faster than the rate of interest rates and the effect that has on the bond, it should continue to do well in the market. Okay? That's what it is. If there's printing of money, assets become more valuable. You look at the Weimar Republic, Germany, very similar to what's happening here. And except there's three. Okay, hold on one sec. Weimar Republic, Germany. They told people to go or not go to work, we'll pay your wages. The French invaded, took over the mines because Germany didn't make their debt payment. They said, don't go to work, we'll pay your wages. All of a sudden, productivity fell. They kept printing money, paying people money. All of a sudden, there was German hyperinflation. We've done something similar. Don't go to work, we'll pay your wages. But not everyone suffered in the Weimar Republic. Some people certainly won. And those people were capital owners and people, technically fits in the capital owners, but this group in particular, and it'll hopefully illustrate it for you a little bit better. Farmers, people who produce goods, they just got to sell them. Whatever the prices are, we'll just sell the goods. Stocks represent capital owners. In the 1920s and 30s Weimar Republic, there was less production. Farms were a huge thing. Now we've got microchips. Obviously, farms are still around. Now we've got McDonald's, similar to a farm. Very similar to a farm, actually, because cheap food. So these are the winners in an inflationary environment. And if you own a stock, you put yourself in that bucket. The other bucket are the bondholders, the savers, the middle class. Those people, they suffer. They suffer. They go to the bread lines and they buy and they get the bread. We don't get the bread. We own the farms. We get the dividends from the farms, which will adjust with inflation. See what I mean? We stay in stocks. We don't go to the bonds. We don't go to the bread lines. Now, not all stocks. Not all stocks. There's one group of stocks that will explode. You want to avoid these landmines. These are the highly speculative, no earnings. And it's one thing for a company to have no earnings. It's another thing for a company to have no earnings and no potential stocks. These companies do exist. I don't own them. It's possible you can trade them efficiently. But if a company doesn't have money coming in and is not growing in a meaningful way faster than the rate of inflation and interest rates, and it's just some pile of cash exploring something that isn't real, that company will blow up. There are some SPACs like that. Another thing, might be dangerous to have a SPAC in this environment which hasn't closed the deal. Really focus on the deal. If it's a good deal, it's a good company, and it's growing fast. If it's cash in a pile, waiting 3 years to find a deal, well, it might be a risky climate, and maybe they don't close a deal, and you're having cash not as a capital owner, but as a person waiting in that bread line. So that's the video today. I hope this is coming off, clear to you. If not, hit me up, comment down below. Point the fingers at the Biden administration and Bernstein for not updating the inflation numbers. Shame on them. Shame on them. Until next time, peace out.